The housing market is about to explode. Fannie Mae's bold prediction. We're going to get into it right now. But first, welcome back to the channel. This is Matt Garland, NMLS number 58700, but I'm better known as MG the Mortgage Guy. We are live. We are blessed. Thank God for another day. If you're new to the channel, make sure you subscribe, hit the bell for notifications. All right. So let's get into this. Fannie Mae dropped the bombshell. They're saying that there's going to be, and this is their prediction, okay? There's going to be nearly 500,000 more homes going to sell in the next year as interest rates fall under 6%. That's an extra $470 billion more mortgage activity. So all my NMLS number gang folks out there, I hope you are prepared for what's about to happen if this comes true, right? But here's the real question. Is this hype or is this the start of the next big wave in real estate? So let's break this down and I'm going to give you some strategies that you need to play this thing right. Okay? So this is what Fannie Mae is saying. Home sales are going to climb from 4.72 million in 2025 to 5.16 million in 2026. Mortgage originations are going to jump from $1.85 trillion this year to $2.32 trillion. They say mortgage rates are projected to fall by the end of 2026 to be around 5.9%. Look, my prediction, and you guys can keep me on record for this, my prediction is for mortgage rates to be in the mid fives on the 30-year fix, okay, by the end of next year. Probably a little bit lower, but I'm confident to say around 5.5%. Today, we're around 6.375 at the time. What's today? September 25th. We're around 6.375%. So to put this all in context, right? This is going to be the lowest borrowing cost that we've had since 2022. This is before the feds started hiking up rates, which crushed affordability across the board for everybody. So why does this matter and why does this matter to you guys, right? Rates are the lock and key of the housing market. See, when rates have been stuck at 7 to 8%, it froze buyers and sellers. So when you have rates that high, it's been no movement. There's still things moving and shaking, but not like they were 3 years ago. Below 6%, that psychology, it starts to unlock now. It unlocks demand. People here below 6%, they start going crazy. They're like, oh shit, I got to get in before this thing go back out. So that FOMO is going to start kicking in for a lot of people. The pent-up demand that we have right now with millions of buyers waiting on the sidelines, millions of sellers trapped in their 3% mortgages that don't want to lose that. But let's face it, a lot of them are going to have no choice because a lot of people over the past couple of years have done what, y'all? They've been putting themselves in debt crazy. And I'm telling you, I'm speaking to a lot of people who are behind on their mortgages right now. 60 days, 90 days, 120 days, trying to work out loan modifications. They don't want to sell because they don't know where they're going to go. They got all this equity. They're trying to wait till rates go down. Bro, they're going to start selling these houses. So there's going to be more inventory, but there's going to be more demand from buyers in the market. So when the rates fall under 6%, I'm telling you guys, the floodgates are going to start opening again. You got millions of people now that's going to hit the market, and you don't want to be chasing in the middle of that wave. So there's an opportunity for you buyers. Lock something in before this demand surges. I'm telling you guys this. Get yourself into something now. Be smart about it. Don't go out here making stupid ass offers, right? Don't go out here just being emotional home buyers. Think like a CEO, but get into a deal right now. Lock in at these price points. We think it's high now, but in a year or two, it's going to be higher. And if you buy something in 2025, early 2026, even if you buy right, you have a great opportunity for you to participate in that appreciation, aka equity. Okay. Use sellers' concessions to your advantage now while the competition is still low. I have people that are buying homes right now, y'all, that are coming out of pocket with little to no money because of all the pent up demand right now. Sellers are giving concessions, buying down rates. They're doing it all. Builders are giving you all the upgrades that they normally would charge you an arm and a leg for. Get this while you can right now, because when that shit changes, y'all, you're going to see. And if sellers, for everybody who's looking to sell, if you've been holding off, 2026 is going to be your window. Prices plus mortgage volume moving together is going to be the best conditions since 2021. It's going to be an opportunity for you sellers who've been holding off. Once you start seeing that rate dip, you're going to be able to now make more money because you're going to have more offers on these properties. Now, if you're a realtor, realtor, loan officer, if you're watching this, please, I want you to chime in the chat and everything like that. Am I talking gibberish and foolishness right now? Or do you agree? Do you disagree? Please, I want you guys to say your opinion too, because your opinions matter to me, because you guys are licensed professionals just like me. And I want you guys to have an opinion on this platform as well. So please, in the comments, please chime in. What is your opinion on this, right? Now, for all my investors, listen up. Buy the dip in activity, not the dip in price. Buy the dip in activity, not the dip in price, right? The activity right now is low. This is your opportunity right now to go in here, get assets that a lot of these buyers, they're not skilled enough to go in that market. A lot of investors now who over leverage themselves. It's a lot of them. A lot of investors who over leverage themselves, they can't handle picking up any new properties because they're cash strapped right now. So if you are an investor, right now is your time to buy in that dip. Buy the dip in the activity right now, because there's not a lot of bona fide, certified investors that's out there buying at scale. There's a lot of fucking newbies trying to hit the market, but the guys who are the real McCoys, the real players in this business, you guys have such a great opportunity right now. Continue to run it up, raise your capital, do what you got to do, because this is your opportunity to secure good assets, to go get those troubled landlords, go get those builders and those flippers who ran out of money on their projects. Get into the market right now. If you got to do some cash out refinance to get yourself liquid again, do it. Because as soon as rates drop, resale values are going to spike. And if you're an investor, you already know you're buying at 60-65% ARVs. So you're going to make a killing. Now, here's some of the risks, right? We got to talk about the good, the bad, and ugly. We got to be real optimistic about this, right? But we got to be not optimistic. We got to be real biased about this. We got to play both sides of the fence, right? Fannie Mae could be over optimistic about all of this, right? They could just be, hold on one second. They could just be overreaching a little bit on some of their predictions. I don't think so. Me personally, I agree with what they're saying, what their predictions are. But with the Fed still watching inflation and any rebound in the CPI, rates could stay higher for a longer time. So we got to start tracking and keeping a keen eye on inflation, because if the Fed funds, we know they're saying they're going to signal for 2 more rate cuts this year, but if that CPI start creeping up, y'all, man, this could be bad news for us, and all our predictions could be out the window. Okay? So, bottom line. Here's my bottom line with everything. And then I want to get your thoughts in the comments, right? Here's my bottom line. Fannie Mae thinks housing market is about to make a comeback of a lifetime. But remember, the winners in real estate aren't the ones who wait for the headlines. They're the ones who position early. Whether you're buying, selling, or investing, 2025 to 2026 could be your window. The question is, and the question I have for everybody, and I need you to answer this in chat. The question is, will you be ready? Will you be ready for those opportunities? You know what I always say, you got to have your P's together, right? Your 7 P's. Proper prior planning prevents piss poor performance. Do you have your 7 P's ready? Do you have the 3 C's? Credit, capital, and capacity to go ahead and take advantage of probably an amazing opportunity in our space. If you don't have all of this right now, what are you doing? What are you doing to get ready? How many hours are you spending studying? Do you have a mentor? Are you viewing properties? Are you learning real estate financing? Are you learning construction? What are you really doing to get yourself ready and take advantage of all the money that's going to be made in the real estate space over the next 24 months? Because there's been a lot of money made in the past 3 years while rates were high, but there's going to be more money that's going to be made over the next 2 years. So drop your thoughts below. Do you believe this is going to be a comeback for the housing market, or do you believe it's hype? Let me know in the comments. I want to know what you guys think. Let me read some of your comments real quick before we go to before we end this live, because we've been on this for like 12 and a half minutes, 13 minutes. I'm kind of liking these quick lives nowadays. Get them in, get them out, right? Rachel Kemp says, I'm getting ready. Let's go, right? L. Lopez says, getting into a home this year with full seller assist. Shout out to you, E. Lopez Arts. All right, let's go. Rachel Kemp, again, I'm getting ready. She hype. She getting ready. All right. Let's see. Jashawn Cobb said, new to the MLO space, do you offer any products or mentoring for new LOs? Yes, I do, Jashawn Cobb. I have several different programs, whether you're a new loan officer, a seasoned loan officer, just depending on your budget and what you're really looking to do. I have price points for all, right? You can join my MLO Kickstart program, or you can go into my business accelerator, right? And the business accelerator is for those who are making money in the business, running teams. Even if you're a realtor, this is for realtors too, right? I got my Realtor Kickstart program, and I got my business accelerator for realtors too. But every level is different, right? Every price point is different. So if you, Jashawn Cobb, are interested, I'm not going to sit here and have a sales commercial in this live right now. But if you are interested, and anybody here is interested in my mentoring coaching programs for real estate professionals, whether you're an MLO, a realtor, even financial service professionals. I have attorneys in my group. I have so many different people in business that I coach and I mentor, and I help them make more money, generate more leads. Just DM me. Show me a DM on Instagram, MG the Mortgage Guy, and let's talk, man. Let's talk. But yes, I do offer products and mentoring for people in the business for sure. Let's see. What's this next comment? Frustration Nation. No, I'm about to go under contract for 3.9%. I'm a realtor and a home inspector. You must be doing a buy down. That is amazing. You definitely sound like you're doing a buy down and you're taking advantage of the programs, right? Uh, Booker T, as long as you buy what you can afford, buying beats renting any day, in my opinion. I agree with that. I agree. Both serve a purpose, right, Booker T? I'm not going to sit here and hold you up. I'm okay with people renting because not everybody can afford the maintenance of home ownership. So if you can't afford it, I say rent because you need a place to live, and renting is much better than being homeless at the end of the day. But if you can't afford to buy, then I would highly recommend that you do buy real estate. If home builders are given 4.99 fixed, I'm assuming rates will hit that level or pretty close at some point. Well, they're not giving you a 4.99 30-year fixed mortgage rate right now. What they're doing is offering you buy downs to where that rate is fixed for the first year. But it's not a 30-year fix. Shout out to everybody on YouTube, man. We got well over 120 people on YouTube right now. Everybody, throw a gem if you got some value from today's session so far. I'm going to stay on a little while longer. I was going to end this at the 15-minute mark, but I'm not. Let's get some questions. Jacqueline West says 5.5% is still too high. Jacqueline West, sorry. Jacqueline West says 5.5% is still too high. Jacqueline West, I 1000% disagree with you. You see, this is what we have to stop doing, y'all. This is what we have to stop doing. You're comparing this to the pandemic years, aka the pandemic, right? These are unicorn years. The 2%, 3%, 4, even low fours to a certain extent. But let's just stick to the 2 to 3% for this conversation. This is something that probably we will never ever see again in our lifetime. We have to get out of the mindset of where we're going to keep comparing interest rates of today to what they was 3-4 years ago. 5.5% is actually a phenomenal rate. Let me tell you a quick story, Jacqueline. When I first bought my first house, my rate was high sevens. Okay. And it was a 2-year fixed. It wasn't even a 30-year mortgage. It was in the high sevens, and it was an adjustable rate mortgage. When I first came into this business, I was refinancing people out of 10, 11%, going into 7%. And then when the rates dropped, everybody was able to refinance and go into the sixes. Now, mind you, I know what a lot of you are going to say. Well, the home prices were not the same. I get it. It's all relative, right? Home prices are higher now. So when you're paying at a higher rate, it makes the payment probably more affordable. And with the way property taxes and homeowners insurance is, I get it. But in the grand scheme of things, let's just say the home prices are still too high. Don't say the interest rate is too high because it really isn't. 5.5% is a phenomenal interest rate. If you can borrow money, think about this. You're borrowing money. You're borrowing. And I want you guys to put this into perspective too. Please put this into perspective. Most of you have credit cards, 15%, 20%, 30%, 40% interest. And you probably got lines of 10,000, 15,000, 20,000, 50,000, right? Your credit cards. You're buying a freaking house and getting a loan for $500,000, $700,000, $300,000 at 5.5%, 6.5%, and we're still saying that's too high and it's spread out over 30 years. Come on, y'all, make it make sense to me. Now, these are not shots at my girl Jacqueline West. This is for education purposes only. So we have to put everything into perspective. You're borrowing hundreds of thousands of dollars at a rate of 6.5%, 5.5%. That is not too high, y'all. Your credit card interest rate is fucking ridiculously high. And y'all don't come with me and say I got 0% interest, because we all know that 0% interest is only for a short period of time. Okay? So we have to stop with the narrative of, oh, the rates are too high, the rates are too high. No, it's not. No, it is not. The rates right now are in a good position. It's just a lot of you don't know the game well enough to understand the glory, the position that we are in. Okay? So that's my TED talk when it comes to interest rates. All right. All right. C's, you says, I'm trying to refinance, but I don't have enough equity. Should I just do a rate and term refinance? C's, this is a great question, man. This is an absolutely phenomenal question, and I'm very happy that you asked this. So everybody get their pen and pad, and let's talk a little bit about refinancing. Okay, let me give you some information on this. Most people on the internet will tell you all the time, and you guys probably have heard the saying before. How many of you heard the saying? And I want you to type yes in chat or no. What they say? Marry the house and date the rate. Marry the house and date the rate. How many of you heard that before? Marry the house and date the rate. Type that in chat. Yes or no, if you heard that before. Marry the house and date the rate. Okay. So if you've heard that before, this is a perfect, C's here. It's perfect that you're saying this, because a refinance is not a guarantee. A refinance is not a guarantee. In order for you to refinance, you need to have equity in the home. See, a lot of people over the past couple years, because rates went higher, a lot of people in my industry, I've even heard this on the news, they would say, marry the house and date the rate, because you can always refinance into a lower rate. That's not true. Now, C's, if you don't have enough equity, you probably can't even do a rate and term refinance, because you might not have enough equity to cover the closing costs. See, there's something called loan to value, LTV. Everybody type in chat, LTV. Type in the chat, y'all. LTV. Type it in chat. There's something called LTV. You need to understand your exit when you are buying property. When you're buying real estate, you need to understand and plan for your future. And how you plan for your future is knowing what the guidelines are for refinancing in the particular loan product that you have. So if you have an FHA, you need to know, okay, if I want to do a cash out refinance and I want to stay in the FHA loan, what's the max LTV for a cash out refinance? Bet. If I'm doing a conventional, and I have a single family or a multifamily, what's the max LTV for a cash out refinance? And then what's the max LTV for if I want to just lower my rate, right? What is the max LTVs? So learning your exit is extremely important. Now, C just says, I have enough to cover closing, but not enough to get cash back. C's, tell us, what's your interest rate right now? Tell me, what's your interest rate right now? So while C's is going to type what his current interest rate is, right? And it's not because of the 80% rule. Well, you're saying cash out refinance 80%. Okay. Copy. But it might not even be worth it to you to do a refinance right now, C's, because you're talking conventional cash out refinance at 80%, right? And I'm taking that you have a single family home right now, right, C's? I'm taking that this is a single family and not a multifamily, because if you was talking multifamily, you wouldn't be saying 80%. And you have currently a 6.875. So I will tell you, C's, you don't need to refinance right now. You don't need to refinance out of your 6.875. And C says yes, he has a single family. So you don't need to refinance out of your 6.875 on your conventional mortgage right now. And I'm assuming you have a conventional mortgage as well. Correct, C's? Let us know, C's. But I'm gonna tell you this. They claim I can get a 6.2. You see? This is what I'm talking about. C's, you got a single family, 6.875% on a 30-year fix. And they claim that they're going to be able to drop you fucking 50 basis points. Guys, let me tell you something. I'm glad we're having this conversation. Guys, if you guys don't boss up and learn my business, y'all are going to be refinancing prematurely and going to slap yourself in a year, 6 months, when those rates are in the mid fives, and you're going to want to refinance again. You're going to pay closing costs now, and you're going to pay closing costs again. And you're going to put yourself in a position to not have no savings, right? Going from a 6.8 to a 6.25 is not worth it. Please, guys, it is not worth it. If you're not dropping a minimum of 1 point on a rate and term refinance, I'm specifically speaking about a rate and term. If you're not dropping at least 1 percentage point or more, there's no even, what are we talking about? And any loan officer that is soliciting you to refinance and trying to sell you and convince you and say, well, you're going to save this, you're going to skip 2 months of mortgage payments or a month of mortgage payments or whatever the fuck they're telling you, hang up the phone. Hang up the phone. Please, hang up the phone, because they don't have your best interests in mind. They're just trying to get commission from you. Plain and simple. I know a lot of people ain't going to like what I'm saying right now in my industry, but I don't care. Because I don't want my community to just be doing dumbass transactions that don't benefit you in the long run. So please, please, don't become food. Don't become food. You are the predator or are you the prey? You are the predator or you are the prey. Choose wisely. Because folks in my industry are starving. They're hungry wolves. They ain't eat all summer. They looking for food right now. And when the headlines are saying that rates are low and this, that, and third, I promise you, in all the sales meeting across America, in every bank and lender office right now, everybody's talking about call your past clients, get them off the fence. As a dipper, get the applications up, this, that, and third. I'm telling you what's happening right now. I'm telling you what's happening. I'm telling you what's happening. Ooh, this is a powerful one. JTOA says, are you going to feed your family or somebody else's? I 100% agree with that. Everybody in chat, if you're a homeowner right now, type in chat. If you're a homeowner, we live on YouTube, we live on Instagram right now. If you're a homeowner right now, are you getting bombarded with sales calls from lenders right now to refinance? Type in chat. Type in chat. D. Kelly on Instagram said they blowing me up right now. Pause. Type in chat. Bartiz says yes. Right? RM says yes. Wiseman says yes. C says yes. LaShonda says yes. Right? Jennifer says indeed. Right? For those of you who are in the threes, of course they're not calling you. NY Truck on IG said, I just got to call or sell a house that he don't own. Laughing out loud. Moves with Mike on IG said, emails, yes. It's Omar said, he said, if and when you refinance and a new rate didn't drop 1%, is not worth it. I came in just as he finished the answer. Yes. Correct. It's Omar. Manny Maestro says, yes, they blowing me up too. Pause. Shoni P says, yes, and I had to sign on my houses saying it's not for sale. That's crazy. Right? So think about this, right? T Young says, I get the emails laughing out loud and I declined it and told them it's not worth it right now. Call quickly ended. Laughing out loud. Refine sell is what B is getting all day. Right? Deron Johnson calls every day. I told him wait until December. I say all this to say it's either you guys are going to be the predator or you're going to be the prey. And those of you, don't get caught in this emotional sales shit that you're going to get caught up in. Because a lot of you, if you ain't got no 7.5% or 8%, and they're quoting you a point or less lower, if you got anything in the sixes right now, chill the fuck out. I'm telling you right now, chill out. Barty says, I got a 5.6 30-year conventional. Won't make sense to refinance until rates get at least 4%. Yeah, there you have it. It got to make both sense and sense. Because you got to understand, when you refinance it, you paying closing costs. And if you're not removing PMI, you know, maybe taking a little cash out, saving some money, doing some debt consolidation, it ain't going to make sense. It ain't going to make sense. So Troy Royale, I wish I could put your comment from Instagram here on the screen, but I can't. But Troy Royale says, what happens to the housing market if rates drop to 4%? What happens to prices? I wish I had some fucking type of animation on this live so I can have a rocket ship taking off, a sound of a rocket ship taking off, because that's what's going to happen to the home values. Home values are going to go through the fucking moon, and I cannot wait. I tell you, because I own real estate, and all of my real estate is going to increase, which means my net worth is going to increase. And everybody on this chat right now, I saw something the other day that said the average American has about what did they say, about 300,000 in equity or some shit like that? I gotta find that. Don't quote me on that. It was something along those lines. Around 300,000 in equity, 200,000 in equity, some fucking quote. It was something ridiculous. I'm gonna find it and I'm gonna post about it. But it's up and stuck. And yes, it's Omar. She said, wait, closing costs on a refinance? What? Shaking my head, laughing out loud. Yes. Yes. This closing costs on any transaction you're doing. If you want to come and get your comment on the screen, go over to my YouTube channel if you're on Instagram, MG the Mortgage Guy on YouTube. This video will be saved on YouTube, by the way, for all my Instagram folks who's watching me live. So if you want to watch the beginning of this, you gotta come over here to my YouTube channel, MG the Mortgage Guy. Charles Realtor for you on IG said 2.875. I'm in the locked in effect. Refuse to sell or refinance. Got a HELOC instead. Smart, Charles. Smart. Okay. Ryan Miner said the average American homeowner has approximately 300 to 315 in home equity as of late 2024, early 2025, with around 200,000 of that being tappable equity. Yes, so I read this the other day. I couldn't remember if I was right or wrong. That's why I chill, but I'm glad. Shout out to everybody in the comments and chat, you know, digging up the information. Loving me say yes, 300,000. This is what I'm saying. This is what I'm saying. The average American homeowner has approximately 300,000 to 315,000 in equity as of late 2024 with 200K tappable equity. These rates go to 4%. Like somebody just asked me on Instagram, they go to 4%. What do you think is going to happen? That number's going to go crazy. For those of you who've been waiting for this crash, and for those of you on who put out all these videos about the crash, I'm still waiting. Right? I'm still waiting. And guess what? If there's a crash, we're going to eat in that too. But for now, as homeowners, and for those of you who are on the sidelines thinking about home ownership or investing, you better come and participate. Because 5 years ago, I still got the videos. When COVID came and I told you y'all should still go out here and buy real estate, a lot of y'all were looking at me like I was crazy. And if y'all would have participated then, you'll be one of these people who have about 300,000 in equity. Ah. Okay. Doris Black says, please explain how the housing value will increase if the rate drops. It doesn't matter if the rate drops if you can't afford a $500,000 mortgage. Well, yeah, Doris Black. It doesn't matter if the rate drops if you can't afford the $500,000 mortgage. But think about how many more people will be able to afford a $500,000 mortgage if the rates drop. There's more people who will be able to afford this. You guys got to understand, and Doris Black, let me tell you something. This is, I'm telling you firsthand knowledge because I talk to a lot of people every single day. And people got money. People got money. I'm sorry. I hate to break it to you. A lot of people think people are broke. I don't know who y'all speak to on a daily basis, but everybody I'm speaking to got some money. They may not got millions of dollars, but they got enough money to buy a property. And if they don't, they have a pathway to get the money by savings and stacking and the income to do so. They just gotta like cut back. But they got money sitting, y'all. So I don't want you guys to believe the hype that we see on the news and hear and all the sob stories. Look, there's going to be winners and losers in life. There's going to be people who are going to eat and there's going to be people who are not going to eat, right? That's just the name of the game. But there's a lot of people out here that can afford a $500,000 mortgage. There's a lot of people. And a lot of these people are sitting on the sidelines with money, just waiting. Because a lot of those people could afford it. They could afford this 500,000 at 2%, 3% too, but they waited. And they feel like, you know what? Shit, I missed the boat. I'm not going to miss it again. So there's a lot of FOMO on the sidelines, y'all. There is a lot of FOMO on the sidelines. A lot. And these people, when they see 5.5%, 5%, 4.5%, 4.75%, oh, they coming back. And guess where I'm gonna be? Right here. We're gonna be writing those deals. I'm just telling you. D. Kelly said, I've been waiting. Got money sitting. Loving Me said it's up. I believe it. I'm telling you. I'm telling you. So I say all this to say, y'all, will you be ready? I said this in my opening, and if you missed the beginning of this video, make sure you guys go to the YouTube. If you're on Instagram, watch the replay of this when I'm talking about the housing market is about to explode because of Fannie Mae's bold predictions that there's going to be 500,000 more sales in 2026 because of the rates dropping, right? So yeah, you gotta do what you gotta do, you know. Deron Johnson just purchased a home at $472K. Hashtag got money. Shout out to my guy Deron. I like that hashtag. If you got money, hashtag got money in the chat right now. If you got a couple dollars to play with, hashtag got money in the chat. All right, so Ryan, you said off topic real fast. Would I be able to do the 5, 4, 3, 2, 1 plan? My old lady and I are married. I don't know what the 5, 4, 3, 2, 1 plan is, but it's the 4, 3, 2, 1. And if you and your lady are married, you can't divide and conquer probably, but you can do the 4, 3, 2, 1. Absolutely. Absolutely. Ryan Miner, something light. Chuck, like, I got money. Loving Me, got money. Right? D. Kelly, got money and equity. I like that. I like that. Okay. AG Phoenix said, got money on IG. You know what I'm saying? I'm telling you. People got money and they got equity. And this is what you guys got to realize, right? We just said the stat, about 300, the average American sitting on about 300K of equity right now. When these mortgage rates drop, think about this, right? I want you guys to really, and it's oh my, I know you was asking on Instagram about the pros and cons of the HELOCs and everything like that, right? But let me give you some game about HELOCs right now, real quick, and why this shit is about to go berserk. The Fed funds rates, when they drop, and I did a video about this early in the week. Go check the replays on my live tab on YouTube. When the Feds lower Fed fund rates, that impact short-term loans, auto loans, credit cards, and most importantly, HELOCs. So what's going to happen is, as the Fed's going to lower rates, as they're predicting, they're going to lower rates 2 more times this year. And then who knows how many times in 2026. What do you think is going to happen to these HELOC rates going into 2026, y'all? They're going to become what? Cheaper. So those who are locked in on first mortgages at 2-3%, but now have an average of $200,000 of tappable equity in their homes going into the new year, and those HELOC rates are cheaper. And now with mortgage rates steadily declining, low 6s, high 5s, what do you think those people who have equity are going to start doing? They're going to start tapping some of that tappable equity. On average in America is $200,000 right now. And they're going to take out that HELOC and they're going to do what? They're going to, hopefully if they're smart, let me say this, if they're smart, they're going to reinvest into real estate. So what is that going to do? That's going to create more competition, ladies and gentlemen. That is going to create more people in the market that want to buy real estate. and they're going to have what? Money. So for those of you who did not hashtag I got money or equity, you're going to have a big problem on your hands, because those of you who are waiting on the sidelines right now, and especially if you do have money and you are waiting for some miracle of a crash or anything like that, or you wait until you see a certain rate being published, you're going to be too late. You know why? Because the people who got money and equity, and Lord, don't let them have a fucking portfolio, because they've been watching Market Mondays and all these wonderful, beautiful shows that we have in our space right now, and they're making money on options, long-term options, swing trades, and all types of other shit that's happening to make people run up a bag right now. And they need to deploy that money into what? Real estate, to avoid what? Capital gains, or minimize their capital gains. What world are a lot of y'all living in, thinking that it's going to get easier? And what's going to happen to those home prices? To the people who are selling, they are going to do what? Raise the price. And why? Because there's more demand. I'm trying to tell you guys exactly what's going to happen. I'm telling you guys what's about to happen. Prepare yourself accordingly, or don't. If you don't, cool. If you do, let's work. Let's work. Let's get you to the closing table. It's great you stayed on live tonight. We need to hear this. Yeah, I was going to end this at the 15-minute mark, and I want an extra 30 minutes. And you know what? I feel good about this. So I might stay on here for a fucking another 10 more minutes. Who knows? What time is it? Hold on. It's 10:25. Oh, it's past my bedtime. Jennifer Singleton, closing on 2 condos this week. 10-year interest only on a 30-year fix at 7.125%. I am unable to cash out refinance for 12 months. Well, Jennifer Singleton, I got questions for you, Jennifer Singleton. Jennifer Singleton, I have questions for you. Damn, I want to get you on this live, Jennifer Singleton. I want you to come on here and talk to us. I want to bring you on the stage, because I got questions about this right here, because you got 2 condos closing this week. First of all, congratulations, right? Again, y'all, look, people got money. My question to you, are you buying both of these, Jennifer, as investment properties? Is one a primary residence and the other is investment property? What is the structure of this? I have questions now. I have questions. Please answer us, Jennifer. Are you in a position to talk to us right now? We want to have dialogue about this, because people need to know what you got going on. And I love the 10-year interest only. I'm gonna be honest with you. I love the 10-1 arm IO for the first 10 years. It sounds like you're doing some non-QM, or you might be going to one of the big box lenders that offer this. And I know a couple of the big box boys doing this. That's why I want to ask some questions. But I don't think you're going with the big box lenders, because you got a 7.125. So this is giving me non-QM-ish. This is not giving me a paper rate right here, because if this was an a paper deal, in my opinion, you should be on a 10-1 arm. You should be in the 5s. Oh, you're doing hard money with this. Jennifer, this is a fucking great deal. A 10-1. No, how are you doing hard money on a 30-year fix? Jennifer, no, this is not hard money. This is not hard money. This is not hard money. This is probably a private lender or a non-QM lender. not hard money. Because hard money wouldn't give you a 30-year fix. And they wouldn't give you a 10-1 arm. So this is not hard money. This is a non-QM lender. Which, this makes sense. Okay, so you're doing a DSCR. Okay, so yes, you're doing, this is on some non-QM shit. You're doing a DSCR, a 10-year IO, 30-year fix, 7.125 on 2 investment properties. Jennifer, I'm going to tell you, I don't know all the details, but I like this deal. I don't know the numbers of the deal right now in terms. Now, I'm talking about from an underwriting perspective, the terms that you got for this is good. Right? Now, from an investment standpoint, I don't know if these condos definitely might be I don't know what DSCR numbers they're using. Did they do a 1.25, 1.20, or did they do a 1-on-1? I don't know, but I don't like condos because I don't like HOA. HOA is the devil. HOA is the devil. So I don't like no HOA. So I advise my students don't even look at no damn HOA. Don't even look at no damn condo. But I would tell you the term of this, Jennifer Singleton, 10-year IO for the first 10 years, IO for the first 10 years and a 30-year fix. This is good. At a 7.1, that is good. That is great. That is great. That is great. I love that for you. I would love to get more information about this investment, though, from an investing side. Nah, so Kanan Howard, you said if it's DSCR, it's paying out to qualify. That's not true, right? Because there's lenders out there that will offer a DSCR. They will offer a DSCR at 1-on-1, basically breaking even. So it doesn't necessarily mean that it's cash flowing. And shout out to the Academy, Jennifer Singleton. I'm revamping the Academy coming the fourth quarter, so y'all stay tuned. I'm revamping the Academy. So shout out to you. I've been working with my coaching clients, my inner circle, but I'm going to revamp the Academy in the fourth quarter of this year. Super low ticket item, monthly, probably like something like $40 a month, $30 a month, or something like that. And just drop a bunch of courses in there. But yeah, shout out to you, Jennifer. I love to hear this. Shoot me a DM, Jennifer Singleton. Tell me you were on the live tonight with the 2 condos, so that way I can, get some more information. I want to make sure, since you are an Academy member, I want to make sure that these are good investment deals, But shout out to you. Apex Capital, you said, please do. That would be amazing, MG. Okay, so if you guys, let me take a quick poll before we get off of here, man. You guys are interested in, a little low ticket Academy, like $30 a month. $30 a month. If you're already in Academy, you locked in. But I'm gonna come out with some 2025, 2026 content for the Academy. Low ticket, $30 a month. Probably put it in school. Move everything over to school because I'm liking the school platform. I got the House Hack to Fund the program in the school academy. But you guys let me know what your thoughts are. Right? Type low ticket. If you agree with me, type low ticket. Type low ticket, yes, if you agree with me, right? If you agree with a low ticket, $30, throw a bunch of pre-recorded courses in there. It'll be an on-demand type of situation. You learn on your own time. You know what I'm saying? Type low ticket if you want that. Apex Capital, I'm getting a whole, absolutely. Wow. It's worth it. Yes. Low ticket, yes. Low ticket, yes. Low ticket, yes. Low ticket, yes. Okay. Low ticket, yes. DM me the word low ticket. MG the mortgage guy. DM me the word low ticket. Jessica Lane. Shout out to Jessica Lane. No. Mila is not here yet. If she was, I definitely would not allow me to be on this live right now. I'll tell you that right now. But she is not here yet. And happy birthday to my nephew. Happy birthday to my nephew, Jess. But no, she'll be here in 20 days. So yeah. Yeah, so low ticket. We got a lot of people saying low ticket. A lot of people saying low ticket. $15 low ticket. I don't know if I'm gonna go that low. But yeah, low ticket. Okay. Yeah. We might have to do that. Low ticket. We got a lot of people in the comments saying low ticket. Yeah, so I'm gonna have two different groups come out in the fourth quarter, October, first week of October. We're gonna have one strictly, and shout out to my ATF family, right? My ATF family, my ATFS family, I should say. Let me get it right. My realtors, man, I love talking to y'all. I love helping y'all. So, and being on that call inspired me because there's so much knowledge that I have for the real estate professionals, but also for the homeowners and the investors. And I need to separate the groups because it's two different types of conversations. So if you're a realtor, loan officer, and you want that low ticket type of family to where you can learn and make money, drop low ticket in my DM and tell me you're a realtor or loan officer and you want that low ticket, $30 a month. That shit gonna make you 6 figures. Cause I'm gonna give y'all some information, So DM me low ticket. DM me the word low ticket on my Instagram. So if you're on YouTube right now, DM me the word low ticket, and I'm going to send you a link probably in the next couple days, and to join the waiting list. Right? So there you have it. All right. Yeah, I've been on here for almost an hour. I was supposed to do this for 15 minutes, but shout out to everybody, man. I'm gonna do we need a license for our proof? You don't need a license for your proof, but don't sit here and waste your time and come onto that side of the world if you're not licensed, So DM me the word low ticket. If you're interested. Okay. Damn, my nose is fucking stuffed, man. All right, it's time for me to go, man. I love y'all. We've been on here for an hour. I haven't done an hour live in a very long time. This actually felt good, man. It felt good with y'all being on here for an hour. It was great, but I'm feeling a little congested right now, so I think it's time for me to go. But yeah, DM me the word low ticket if you want to join my low ticket community, and I'll send you a link to join. All right. Rewind the video. Watch it back at your own leisure. If you're on my YouTube channel right now, go over to MG the Mortgage Guy on YouTube if you want to watch the replay from the beginning. We started talking about the housing market is about to explode because of the bold Fannie Mae prediction. All right. And let's grow. Okay. All right. I'm going to see y'all. What's tomorrow? Friday? Maybe I'll come back here on Friday. You never know. Hit the bell for notifications, but I'm feeling good, man. All right. Matt Garland, NMLS number 58700, better known as MG the Mortgage Guy. Peace.